Hi, how you doing? My name is Jeff Roth with Commercial Finance Advisors. We do commercial mortgages and small business financing throughout the United States. And in this video, I'm going to be talking about the problems associated with declining gross sales. Note that this is just one section of our total report. The rest of the report can be found on our website, and we go over basically all the reasons for decline and give the best possible solutions to each individual issue. Again, the report can be found on our website. So, declining gross sales, first of all, let me define it for you. Say in 2009 you did $1 million in gross sales, and in 2008 you did 1.2 million in gross sales, and then in 2007 you did 1.5 million in gross sales. Most bankers and underwriters would look at that and basically come to the conclusion that your business is failing or is a substantial credit risk, and therefore would decline financing simply because your business had a decline in gross. For a lot of banks, it's just basically a simple no. It's basically falls outside of the box of their lending, and can create a problem for a lot of borrowers. And as far as from the borrower's perspective, I mean, this is one of the most enraging issues we see. I mean, a lot of people are going, look, we're in the greatest recession here we've seen, and perhaps since the Great Depression, and of course our business is going to have a decline in gross sales, and so it's a frustrating issue for borrowers, and it seems to be a pretty common sense issue that bankers should be able to get over. Unfortunately, the reality is that most bankers, underwriters, don't look at it that way, and most of them are limited to an underwriting box at their bank that stipulates that if there is a decline in gross sales, that they are simply supposed to decline the file. This is a huge challenge. It's perhaps the biggest reason for decline that we see right now, if not the biggest, probably in the top three. So if this is your challenge, you're definitely not alone. So as far as solutions to this, you really need to sit down and go over your strengths and come up with a game plan on how you're going to approach this. And first and foremost, if your business is still profitable and still making money, you may not have that big of a problem with this. And some of you that may be watching this and haven't really gone out look for financing may think it's not a problem at all to begin with, but that's not the case. Again, 80% of the banks out there will simply decline you if you do have declining gross sales, regardless of your profitability. But again, if you are profitable, you should be able to find a bank that will do your loan. And the solution here is just to simply keep looking until you find a bank that is in a healthy enough position to lend and is an aggressive enough position to lend your business. So you need to just get out there and keep looking and find that bank. And remember, you only need one bank to do your deal. So you may have already talked to 10 or 15, but again, you only need one to say yes. Another solution here would be that you had sold off or shut down another division or another business that you may own, and that may have resulted in an immediate drop in gross sales. So, the key point is here that you shut down the business on purpose and that you're not seeing a gradual decline in gross sales due to problems with marketing, etc. So, you're approaching the banker basically stating and establishing that you've sold off or shut down a business entity, division, and that resulted in a decline in gross sales, and that you've done this on purpose. Another potential solution would be that you have simply increased your prices, and you've done that because you're trying to increase your margin, and that although your gross sales have declined, your profitability has gone up. And a great way to establish the logic of that would be if your profitability has gone up in terms of not just the percentage, but the actual level of profitability has gone up, then a lot of times bankers would like to see this. You're bringing home more money, even though your gross has gone down. If you have had a drop in gross sales, but you do show other signs of strengths in other divisions or in other entities that you're pursuing, you can establish that via trailing 12, and basically you're establishing here that you've diversified in another market and you're showing an increase in sales due to that. That's often a good way to establish that you are in fact on the increase. Another solution, we talk about this a lot, is bringing on a partner. And the primary benefit here would be twofold. One, you're establishing that the new partner has additional assets or liquidity, which can further back the bank, which gives them more collateral, et cetera. And then also, if the person has a substantial amount of experience in the business, you can establish that with the bank, especially if the partner's been on for a while and you are seeing an increase in gross. Again, this is going back to my last point about establishing your year-to-date and improving and showing how the new partner, through his additional contacts, has helped increase your gross sales. On the flip side, rather than talking just about increasing your gross sales, you can also establish your profitability. And earlier we talked about if you're making enough money, it doesn't really, to a lot of banks, they don't really care what your gross sales is. You're just establishing that you're very profitable, and who really cares if your sales have gone down if you're still making a lot of money. So reducing your expenses kind of falls into the same category here. Basically you're showing and proving that you're cutting costs here to the point where you're continuously increasing your profitability. And though this is not the best solution you can come up with, it can certainly help you get your loan. And likewise, if the loan you're working on now is going to help you immediately with issues that you might have, for example, if not only that you're having a decline in gross sales, but also your profitability is dipping, if this loan is going to help you consolidate debt, spread out amortization schedules, et cetera, and increase cash flow, you can establish that the proposed cash flow after the loan gets closed that you're working on, that you'll be profitable enough to meet their underwriting standards or hopefully exceed them. One of the worst things you can do here is basically respond and blame your decline in gross sales simply on the economy. First of all, that gives nothing for the banker to work with. They may also perceive this as a lack of depth on your part in terms of not having a great understanding of what the problem is, and also not a great understanding of what you're going to do to help turn your business around. So you need to give them something to work on. And the solutions we talked about prior are the kind of things you need to talk about. And also you need to sit down and figure out what the positive sides of your business are and what strategies you have to increase your gross sales. You need to present this information and be positive about it and make sure that the banker understands what you're talking about. So in conclusion, having declining gross sales is a tough problem to get over. However, if you are creative and can establish that that your situation, that the problem has been resolved, or that by getting the proposed loan closed that your situation will be resolved, you should have a good chance of getting the financing that you're seeking. So thank you for watching, and we wish you the best of luck with your search for financing. Thank you.